This is our Forex blog for July 16th, 2012. And like we do most days, we want to buy the strongest ones versus the weak and sell the weakest ones versus the strong. This is our build your own trend currency meter. I had an issue with my computer last night and I just brought it up this morning around 8:30. And it's a live only tool. We also have currency meters that work historically, but they're not quite as fast as the build your own trend sortable currency meter. This one allows you to take a quote sheet and which has all the individual symbols on there. We statistically compare them to each other. You can sort them and see the strongest ones on the top. The euro is going up against 100% of other currencies on the hourly trend basis. The Swiss is the second strongest, then the pound. The weakest three are the dollar's the weakest, then the CAD, then the yen. It's always nice to sort these so you can look for buys in the ones on the top versus the ones on the bottom and sell the weakest ones versus the strong. The CAD is above the yen, for instance. So if the yen was very strong, then you'd want to be selling the CAD yen. You got to know which currencies are on top. Yens are always on the bottom. Euro is always on the top. Pound's on the top in under most cases, except for the euro pound, and I believe that's the only one. So anyway, the first step of our system is to find the strong ones and buy them versus the weakest. This is one heck of a pattern right here. Extreme strength followed by a pullback without much weakness. Usually that momentum to the upside will continue. It's just like it's hard if you stood in front of a moving car. It's coming at you 50 miles an hour. You're not going to be able to slow it down by just jumping in front of it. And the same principle applies to trading. This is, a car moving at 50 miles an hour and, just lightly tapping on the brakes. It's not going to completely slow it down. The momentum is still going to cause it to go forward. So, buy this one versus the weakest, which in this case is the dollar. You want to buy the euro dollar and also, euro CAD. The more time frames up in one currency, like you can see the pound, pretty much all the time frames are up. If you really wanted a higher probability, even though it's slightly less strong than the euro, all the longer time frame trends are up, whereas with the euro, the longer time daily, weekly, monthly trends down. I personally would probably 9 times out of 10 pick the pound versus the dollar. So then that's the first step of our three-step system. Find the strongest and weakest currencies to buy and sell. Step 2 is to bring up that currency's chart. And you can see I brought this up around 8:30 and our real-time tools started to show some signals on here. One of the new features in the version we're going to be releasing today is when you remove the FX trade signals and add it again, you will see that it now allows you to not show counter trend trades. I've spent a lot of time working on the trend trades, the counter trend trades. There's about 12 different patterns it looks for. I haven't spent nearly as much time. Probably 10% of the time I've spent working on the trade signals has been counter trend. 90% has been trend, trying to improve the accuracy of the trend trades. And usually I wait for a decent size enough pullback. So once you uncheck show counter trend trades, it's not going to show any circles on the chart. When this comes back up, you're only going to have the trend trades. And underneath the hourly moving average, I tend to look for sells, and above it, look for buys. So one trade was right here, another trade was right here, and another tool we're going to release soon is a very fast, instantaneous trend line type tool. It's like a moving average, but it uses digital signal processing algorithms to be very, very fast. Here's a 20 period, for lack of a better term, moving average. And look how fast this is. So if you're looking at a super strong trend and you want to get in it, you might wait for it to break through this. Now in this case, you would have got in, have a small loss, got in again here, and you can see our trailing stop also did a good job of locking in the entire move, getting out here at 34. Or when our buy signal right here happened, it's above the instantaneous trend, you're in. And this is a good tool for waiting for enough of a pullback. A lot of times when the market hits our upper containment bands, it needs to pull back a decent amount before it continues up, which will allow me to show you another tool we released today. You go to Add Script, Fisher Oscillator, and this will show you a decent sized pullback. Anytime it moves up and typically pulls back somewhere around the lower extreme, minus 2.5, is where you want to look for an entry. So when it's near a minus 2.5 pullback and you get a buy signal right there, you want to get in when it goes 1 pip above that bar's high. Or in this case, because our soon to be released ultra fast moving digital signal processing based moving average is very fast. Has very little lag too, which is amazing. This is a 20 period one too, by the way. And then you just put a 20 period moving average on there so you can see how much faster it is than a 20 period simple moving average, or even exponential. It's much faster than that. You can see you're in this trade right here at 27 versus 33. That's 6 pips. Now, 6 pips, if you're a new trader, it might not mean that much difference. But typically, we put our stop underneath the low. So if you're long here at 28 and you put your stop 1 pip underneath the low, you're risking 10 pips. If you are getting in here 6 pips higher, instead of risking 10 pips, you're risking 16 pips. And the key to trading is small losses, big wins. So if you want to shoot for 2 times bigger wins than losses, guess what? You need a 32 pip win to justify that 16 pip loss. With a 10 pip risk, you only need to find a 20 pip gain to get your money back. And keep in mind this, not only is your risk reward parameters vastly improved, if you're in here at 28 and you get out here when the trailing stop gets hit at 45, you made 17 pips, right? That almost approaches a 2-to-1 ratio. But if you got in it when it went above the moving average here at 33 and got out at 46, you only made 13 pips. You didn't even make as much as you risked. And that's what's so amazing about this. And on this pullback right here, wouldn't you rather be in the trade here than here, 1 bar early? And if you're in early and you move your stop up to break even real fast, notice how fast these go to break even. You're in here, goes up 1 bar. Your stops, if you put it underneath that bar's low and you move it up underneath this bar's low, guess what? Your stop's pretty close to break even within 1 bar. So it's radically improved, and we're going to be redoing a lot of our different statistical tools that use various time frame moving averages to use this. It's going to give faster and earlier signals, which will hopefully allow you to have smaller losses, and when trades work, you have bigger wins too. It's almost too good to be true, because most of the time when you cut the size of your loss, your profit is going to go down too. And most trading techniques, if you cut one, you tend to cut the other. This one actually decreases your risk while keeping a much bigger potential profit, because you're getting into trades earlier, 6-8 pips earlier a lot of the times. This one right here, if you waited for the close of the bar at 02 versus 05, that's 3 pips faster. And you can see when the market's really moving, if you went short right here when it went underneath there and then got out right here, you didn't lose that much. You're in again. If you use, when it's above the upper containment band, if it's above our trailing stop, you might want to get out when it gets touched right here, because it's very likely to reverse at the upper bands. So let me show some other examples today. All right, we can see here that the CAD very weak on pretty much all time frames. The pound's very strong. This is not a currency that I typically trade much, and I don't leave running overnight, so we're just going to bring it up, pound, CAD, 2 days, and we're going to put a 5 pips per bar range chart. I'm a huge fanatic about range charts because they're so much cleaner than time-based charts. Okay, so you can see from that time when our real-time tools were, it's pretty much the time that I brought it up on the chart. This one was a very strong one, and the CAD was the weakest. So, not even using any of our other tools, let me just put on the new Fisher, letting you see pullbacks. Obviously, this was one heck of a strong trend. If you get a nice little sideways wedge like this, and you get some kind of a pullback in the Fisher, as soon as it goes green, you can get in right here. You're into that trade. This was so strong that it didn't even pull back enough to hit or come close to the lower extremes. This one was one right here at the beginning of that huge uptrend. Let me also put on, and I haven't named it yet, so I'm not going to show my raw code yet, but this is the digital signal processing method, which I think also is going to help people and I'll put a 20 period on here for this. It'll also help you find entries into the trends as well. You have the currency meter showing you, again, the pound's very strong on all time frames, and the CAD is weak on all time frames except the monthly. So you want to buy the strong versus the weak. You got this little pullback right here. You can just get in, you know, and you can also just draw a trend line yourself underneath the bar's low to get out. So you're out right here. Pull back, go along again here, out somewhere here. And once it gets above our upper containment bands, it's usually not worth continuing to try to trade with this trend. You know, more than likely it's above our upper band up here. But at the beginning of the trend, you got this nice entry here, here, and maybe the last one right here as well. The yen was strong during times today, and it's also strong on all time frames. So you could sell the CAD yen, weak CAD, super strong yen. And hit the plus key to zoom out. You know, here's a little bit of a pullback. You wait for it to go underneath the super fast digital signal processing base moving average, and you can see it fell 15 pips there. Pulled up, and this thing's so fast, a lot of times price, I've watched this today and traded with it today for the first time. It kind of goes up and down around it, and when it breaks the low, you can get in and just wait for it to go back above it to get out. You know, so you'd be short here at 76, out at 64. Nice little pullback right here, short again, and you made about 12 to 13 pips on that one. What's cool about this is once you're in a trade, if you put your stop right above the bar's high where you're entering at, and as soon as it goes down, you move your stop here, guess what? Your stop just got cut almost in half. It's going sideways, starts to go down. Just keep trailing your stop down right above each bar's high. And obviously when it goes sideways like this, it's almost a matter of time before it breaks above it. Usually 3 to 4 bars sideways, just going to get out. You can lock in a few extra pips that way. And also notice this is at an extreme, at a very high probability place of reversing, because when these things get hit, you typically do get a reversal. And also, once I release, I actually am releasing this tool today. I'm going to be going over and having specialized classes on looking for counter trend trades using this. It's a wonderful counter trend finding tool.